Step 3 is to pick some investments. This is all about deciding what actually goes into the box. So we could fill it with individual stocks like Amazon, Meta, Apple, Tesla, and Nvidia. But to be honest, while these are great companies, putting all your money into a handful of individual stocks can be really risky. If one of these companies doesn't perform well, it could drag down your entire portfolio. That's because your money is tied up in just a few companies, and that increases your risk. That's why for this challenge, I'm using a different strategy. And you might have guessed it already. It's called index fund investing. This will give us exposure to loads of different companies without all the stress of picking individual stocks and praying for a winner. Index funds can hold shares from hundreds, sometimes even thousands of different companies at once. This makes it easy to invest in a whole bunch of companies all at the same time, making your portfolio more diversified. Now, here's the best part. What makes this even more powerful is that it's going right inside my tax-advantaged account. So, not only do I get the benefits of diversification and low cost, but I also get to avoid paying taxes on dividends or capital gains while it grows. This is perfect for my $5 per day challenge. Of course, it's important to remember that stocks can go up as well as down, and your capital is always at risk when investing. However, if you choose to invest in an index fund like the S&P 500, which tracks the performance of the top publicly traded companies in the United States, it's worth noting that historically, no one has lost money when they've bought and held for over 20 years. Past performance isn't a guarantee of future results, but long-term investing in diversified funds like this can help reduce risk compared to individual stocks. Let's head over to Trading 212 and set this up. To the left, you can see this option to create a pie. Once you click it, it gives you some different options like copying model pies, looking at other people's pies in the community, and creating your own custom pie. A pie is just a fancy way of showing you how your investments are divided between different stocks. For example, if you had $100 and split it equally between 4 individual stocks, your pie would have 4 equal slices of 25% each. We're going to go with the custom pie option and click Add Instruments. I'm going to search for a simple Vanguard S&P 500 index fund. As you can see, there are a couple of different options. One has ACC in brackets, and that stands for accumulation, meaning that all your dividends are reinvested back into your investments. The other option looks the same, but has DIST in brackets at the end, which is short for distribution. This second option means that you're given the dividends rather than them being automatically reinvested into your account. So for me, I want this challenge to be as easy as possible, so I'll be choosing the accumulation one. Now, I'm going to click Add to Pie. All right, so we've got our account set up and decided what to invest in, but here comes the tedious part. Invest in a $5 every single day. Honestly, I think a lot of the hate towards this challenge comes from people imagining the effort it takes to do this every day. But the truth is, it really doesn't have to be that hard. That's why step 4 is to set up auto investing. Now, this feature isn't just great for the $5 challenge, it's essential for any investor, no matter how much you're putting in. This is because it takes your emotions out of investing and leverages the power of dollar cost averaging. Let me explain. The reality of the stock market is that it's completely unpredictable. It doesn't just move in one direction. Sometimes the market will be going up, other days it will be moving sideways, and then there are times it'll be going down. When the market is down, your money actually buys more shares because prices are lower. For example, my $5 stretches further, letting me pick up more shares at a discount. And when the market is up, my $5 buys fewer shares because prices are higher. The idea is that over time, these ups and downs balance each other out, which is the magic of dollar cost averaging. It's been such a reliable and stress-free strategy for me because it takes the pressure off trying to time the market perfectly. For this challenge, I'll be using this exact strategy by investing the same amount every single day. And if you don't want to do it daily, you can invest monthly and still see the same results. It's entirely up to you. Let's go back to Trading 212 and click Next. This then gives us the option to either choose to invest manually or use the auto invest feature. We're of course going to select auto invest and then click next. Now we have these three sliders we can play around with. The first one is our initial deposit. This is the money we're going to be investing right away. So I'm going to set this to £5. Next, we have the investment frequency. As you can see, you can do this every 2 months, monthly, every 2 weeks, weekly, but we're going to select the daily option and press update. And then we're going to change this to £5 too. Finally, let's set the years to 1. And as you can see, there's a cool value projection graph at the top, which shows us what we can expect to make in a year based on historical data. £1.97 thousand may not seem super impressive when we're going to be putting in 1.8k. But if you move that slider all the way to 40 years, look how compound interest takes over. This value projection says our little £5 a day investment could be worth £5.52 million from an investment of only £73,000. Of course, this is all estimations, and if I were you, I'd take this with a grain of salt, as no one knows what the market is going to do long term. However, playing around with these compound interest value projections is very motivational. So let's bring it back to 1 year and click next. Now we get the chance to name our investment. So I'm going to call it coffee a day and then click next. Now it's time to fund the pie. So let's click this, and as we've already funded the Trading 212 account, we can choose the free funds option. This isn't free money, it just takes cash from your balance on Trading 212. So as long as we top this account up every now and again, then the daily investment should go through. Then I just need to press confirm and boom, that's all set up. So a year from now, hope I'm still alive, I'll catch up with you. Right, it's time to check out the results. I know I'm about 5 months late on this. That's how good the auto invest feature is. You just forget it's investing in the background. But trust me, the results are worth the wait. They're really interesting. I started this challenge back in August 2023. And after the first month, I was up £2.37, which was a 1.5% return. Not bad. But then September came along and things didn't go quite so well. I was actually sitting at a loss of 79 pence, which was a minus 0.5% return. This right here is why so many people give up on investing. In the first 2 months, I had almost nothing to show for my consistency. It's no wonder people decide to pull their money out when they don't see immediate results. But I was determined to stick with my dollar cost averaging strategy, and I'm so glad I did, because things really started to turn around. Fast forward 6 months and I was up £83.70, which is an 18.2% return. Not too shabby. And then by 12 months, I'd made £161.34 in profit with an 18.1% return. That's where the auto investing feature stopped, but I've continued tracking the growth since then. Now let's jump to today. This is where it gets a little bit crazy. In total, I've invested £1,505, but my investment is now sitting at £1,972. That means I've made a profit of £467.03, which we can convert to dollars, and that works out at $576.59, which is a staggering 43.8% rate of return. Now, this is proof that time in the market beats timing the market. If I'd panicked and pulled my money out after losing some in the second month, or stopped the challenge altogether, I'd never have reached this point. Even I couldn't have dreamt of results like this. It's down to the wild year the stock market has had. However, it's important to note that these results are not typical, and past performance doesn't guarantee future results. I'm thinking about continuing this challenge long term, just to see how much it could grow. If that's something you'd like to see, let me know in the comments and I'll make another update video in the future.